Good evening, money magnets. It's your Uncle Charles here. Guys, second red day in a row for the SPY. But guess what? Tomorrow, we have FOMC at 2 p.m. Eastern Time. FOMC data release. And then 2:30 p.m. Eastern Time, Uncle Powell will be speaking. Okay, I am expecting some volatility. I have a bit of confidence we're going to get some volatility. Why? Well, because lately volatility's been low. We had 2 red days in a row. Healthy, healthy, healthy. Got the RSI out of the overbought situation. But the volatility's been pretty low. Now with FOMC tomorrow, I think it's going to serve as a catalyst, or at least I hope it'll serve as a catalyst to get us some volatility. Okay, and we're gonna cover the VIX. VIX look like it's breaking out of this wedge. Okay, and if the VIX goes up, volatilities go up. I'm expecting some big moves. Okay, now let's get straight to it. Okay, we have a situation. We're seeing some bearish signs here. You guys remember I talked about we zoom out on a daily chart. I got the fib levels from the high down to April 7th low. And I had the golden zone, the 61.8 fib level at 563. Well, guess what happened today? We got a close below that 563 level. And not only that, right around that area, you guys can see the wick on that candle. We got selling pressure. So not only did we get close back below that critical level turned into resistant. That's amazing. Now, the aftermarket, the price is doing a bunch of crazy stuff. It was dropping aftermarket, and then just recently, not too long ago, it just popped up. I'm not sure what's happening. Option income ETF. I'll have to do some more due diligence. Why did it just pop up? But, I'll cover that in the Discord. But we know where the important pivot level is. Okay, it's at 563. Below it, false breakout mode, especially with it turning into a sell area today. Below it, false breakout mode, bearish. Okay, now there's a little bit more context I'd like to discuss with you guys here. One of my favorite patterns is the island reversal pattern. There's a bullish island reversal, and then there's a bearish version of it. Now, if we look at the bearish version here, you see we had a gap up, chop a little bit, consolidated, chop face, and then we gap down, leaving the gap. That right there, that box, that is your island. And we look at SPY, potentially could have an island reversal. Did it play out yet? No. But if you see the SPY gapping down tomorrow, that will be a bearish island reversal and a good sign for us to be bearish. And gapping down that gap, where's that gap needs to be? Okay, well, the last gap up was on April 30th. That's around 554.5. It's actually one of my pivot levels. That's the gap fill level right there. We're far above it. But if we can gap down to that area and below it, Uncle Charles, would be bearish. All right. Now, obviously, if we get back above 563, Uncle Charles will once again be bullish. Okay, now here's the best part about it. I'm giving you these pivot levels. Lately, if you check the 15-minute chart, we've been getting some decent level-to-level move, but nothing impressive. But with FOMC tomorrow, guys, we have a catalyst. Unless Donald Trump gives us another one of those awesome Twitter posts or X posts that he be making, unless that happens, Uncle Powell and the data release tomorrow should give us something. All right, above 563, I recommend being bullish. Yeah, that would put 565, 567 in the fib level at 568.7 in play, and above that, the 200 daily moving average. Okay, above 563, if we can recapture it, I would favor us breaking 568.7 high and getting to that 200 daily moving average. Okay, you got my pivot level, guys. Above 563, I'd be bullish. Now, if we're below it and we start breaking down some support levels, 560, I have one at 558 here. That's a fib level. I'd be bearish. Okay, I think we could drop all the way down to 555.5, which is the gap, and below that gap fill. If that gap get filled and we break down that level, I would be bearish all the way down to the mid 540s. That would be a $10 drop to the downside. Very, very, very nice, guys. Please add these levels to your charts. Above 563, Unco is bullish. Below 563, Unco is bearish. Let's try to keep this simple. Let's keep this simple. Below 563, and we break down 558 and 555.5, Unco would be bearish at least until the mid 540s, 544 area. Okay, and of course, once again, like I said, we recapture 563. That's a false breakdown setup. Go long. Moving on to triple Q here. It rejected from that 200 daily moving average, and since then we've been having some more red days. Okay, now we are bouncing to the upside. Today's close around 481.4. Now we're around 485. Something caused the market to pop up. I will address this in the Discord tomorrow once I find out what happened. But yeah, 483 is Uncle Charles' equilibrium level. If we can stay above 483, I do favor 488 being tested with the 200 daily moving average at 491 above. And you know, we on the initial test of the 200 daily moving average, it did reject it. So if Triple Q can put in a higher low, I think the next test of the 200 daily moving average, the bulls have a higher chance of breaking through. Okay. Now my bullish sentiment will be invalidated if we drop below two levels, 483 and 477. Okay. Now I have 483, below that I have 480 and then 477. But if those two levels fail, 483 and 477, Uncle would be bearish down to 471.6 into my uptrend line, which should send Triple Q down to the 464 to the 466 area. Okay, I'm giving out more spread out levels here, guys, showing love to the swing traders. Here's NVDA. That fib level around 110.7 held, and NVDA barely avoided a breakdown of the 50 daily moving average. But once again, that 115 area still held as resistant. Guys, Triple Q is obviously consolidating here. Critical support levels holding, critical resistance levels still holding. But I'm still going to stick with my plan. As long as we're in the chop range, you can play it level to level. But if we're expecting a bigger move, when we're FOMC tomorrow could be the day. If it's going to end bullishly, 115 still must clear, and I believe it's going to be a big move, 5, 10, maybe a $15 move to the upside. Okay, now if we drop down 112 and 110.7, I think it's going to be a real nasty move to the downside, at least down to 107 and below 107. Breakdown of this bear flag, next leg incoming, and it's going to be a bearish leg to the downside. Nasty. Tesla. Well, the M pattern still didn't play out just yet, guys. Still didn't play out just yet. We closed right around the fib level around 275, and now we're gapping above it. But once again, guys, for this M pattern to play out, 275 must fail, and that pivot low from April 30th must fail, 270.7. Those two levels must fail, and we can get really, really, really bearish. Like, I'm talking the next leg down, 20, 30, 40 plus dollar move to the downside, okay? But you need to be patient, and you need the right price action signal. 275 and 270.7 must fail. Otherwise, I mean, if we recapture 280, it's a good chance we go pop back up to 284, 286, 290, and 292. And above 292, Uncle Charters would be bull bias. The next leg is incoming. The next 10, 15, 20 plus dollar move incoming, and it's going to be bullish. All right. Coin still looking bearish to me. However, critical support level held here at a fib level at 193. It held. Now, if this M pattern is to play out, the low from April 30th must fail, and the low from April 30th is at 195.5. Today we close at 196.8, so not quite a breakdown, guys. Still must see it fail. We still must see it fail. 197, 195.5. 193, all must fail. And this M pattern, the next leg down is going to be nasty. Look like in a a descending triangle pattern as well on coin. Now, we do have resistant level, okay? We do have resistant level, 198.5 and 200. Those levels we capture, we could be heading back up to the top of the descending triangle pattern, which could send coin back to 207. And above 207, Uncle would be bull bias on the coin. Here is the VIX. We got the breakout. Will it lead to anything, or is this a dead cat bounce? I'll tell you this. If it's a false breakout setup tomorrow, I would be a little bit disappointed, not going to lie. But you can still trade it. Okay, 23.6 and 22 fails tomorrow. It's going to be extremely bearish for VIX. Could be a very nasty waterfall to the downside. But if this breakout holds and with the combined power of FOMC, oh man, if we clear 25, 26.5 tomorrow, it's going to be a big body green candle, possibly a big body green candle to the upside. Lots of volatility, and the SPY will go crazy with it. Guys, Uncle Charters, love you guys so much. Thank you guys so much for supporting my dreams and being here with me. I hope I was able to give you guys some value, give you guys some pivot levels and trade ideas for tomorrow. Let's be prepared and trade it unbiasedly. And always remember, you guys are money magnets. Peace.